Hello everyone, a very good morning, good afternoon and good evening to all of the viewers from around the world. This is your host Vaibhav. For today's session of JForex Indicators Explained session, I will be taking you through one interesting indicator, its properties, its concept and how we can customize this indicator for the strategy which we want to use on the any instrument of our choice. So we will be looking at some of the examples on the newly released JForex 4 platform of this indicator. So let us now head to the JForex 4. There is the Euro USD chart drawn on the hourly candle grid. And I have also plotted the percentage price oscillator indicator for this Euro USD with the calculation setup is as per the default. I have not made any changes to its default parameters. The percentage price oscillator is a simple indicator. It is derived using the EMA of two different calculation periods 26 and 12, and here we are considering the SMA. So the formula is very simple. We take the SMA of 12 candle periods and then we take the SMA of 26 candle periods. We subtract the 26 candle period SMA from the 12 candle period SMA and divide it by the 26 candle period SMA and multiply it by 100. So we get the output in terms of the percentages for the for the instrument of our choice, Euro USD in this case. It is a oscillator. There is a unbounded indicator. We don't have any upper limit or the lower limit defined for the indicator. Its values can vary, but of course, in percentage terms, you are not really going to see the fluctuations too extreme. These are going to be minor as any instrument, whether it is a forex currency or a commodity or index, is going to move only small percentage point at any given point in time. But of course, some large fluctuations can happen, but those are going to be rare events, not regularly occurring developments. Now, the PPO, the use is simple. We can utilize this indicator for determining the trend. If it is bullish or bearish, we can simply look at the value and the direction of the output. If it is on the rise and if we see the output of this indicator rising from below zero to above zero, that is indicative of the strength of the trend turning bullish from bearish. And if we have the output in decline and declining below zero from above zero, that simply indicates that momentum is now shifting from bullish to bearish. So we can utilize this zero marker as a important entry point. Also you can utilize that for making for defining the entry points, and similar fashion we can utilize its absolute values also. If we have the outputs negative and in decline, then it is better to keep looking for short selling opportunities. And if we have the output in the positive territory and on the rise, that means the bullish trend is gaining strength, and we can continue to look for fresh opportunities to go along. So both ways we can try to profit from these market dynamics, whether it is bullish or bearish. We don't really have to bother. As long as we are on the right side of the trend, we can be confident of making money. So that's how this indicator is going to help you look at the existing trend. If it is bullish, then you can go for buy trades. If it is bearish, then you can go for sell trade. Now, for customizing this indicator, you can go for different calculation periods. You can even vary its type of moving average. So we get all these options for customizing the indicator to take advantage of the market opportunities in the manner we deem fit. If you are a short-term trader, if you are more of an intraday trader, then it is better to keep these calculation periods on the lower side of the spectrum. But if you also want to know what is the trend on the larger time horizon, then you can increase these fast period and slow periods calculation time, and you will see that whatever is the output, it is going to be more stable when you have larger calculation period, and if you use lower calculation periods, if you use a smaller calculation period, then the output is going to vary significantly depending on the kind of price action we are observing in the instrument of our choice. So if you go for different types of applied prices, even in that case, we will have the output of these indicator varying significantly depending on the kind of applied price we use: close price, open price, high price, low price, median price, typical price, weighted close price. We get all these options for defining the applied price, and depending on the kind of applied price, if we simply vary it to say open price, then you will have this output of the indicator slightly different from what it is when we have the high price as its applied price. So please pay attention to this plotting of the indicators chart, and you will observe that this line keeps shifting as I use different types of applied prices for the calculation of this indicator. So this is now typical price, weighted close price. If I now revert back to close price, you will see again it has shifted, and even we can vary its calculation period. If you want to use lower time horizon for the calculation, you can use it. You can go for lower time horizon. You can even reduce these slow periods SMA, or if you simply want to look at its responsiveness when we use extremely low values, you can even try out a combination like 7 and 14. So here you can notice that we are seeing the fluctuations in this indicator quite often with these price moves. In terms, in keeping with the price moves, we are looking at these variations in these indicators plotting. But when there is extreme volatility, you might have too many signals generated. So that's why we have to look at the trade-off between the responsiveness of the indicator's output and the reliability of the indicator's output, because in any indicator for that matter, we have to deal with this trade-off. When we use lower time frame, then the indicator becomes a lot more responsive to the recent price fluctuations, and when we use larger calculation period, we have the lag in the output of the indicator. So here you can notice that keeping up with these price moves, we are seeing these moves in the output. It is crossing over from both the sides. We are seeing the output dipping from one side to the other. We get this slight decline in this price action of the Euro USD, and the output dips below zero. Then again it rises, and again it dips. So this is going to keep up with the price fluctuations, as we have these calculation period defined on the very short horizon of 7 and 14. But increase it if I increase the calculation period, you will notice that this indicator, the same indicator, then becomes a lot more stable, and it is not going to become that much responsive to the recent price fluctuation. So here now we have the slow calculation period defined at 21, and the larger calculation period is defined at 42. So because of that, what has happened is that it is now being calculated using last 42 hours worth of data. So whatever is the recent price fluctuation, it is not going to cause a major directional change in this output of the indicator. And only when that price action is sustained, only then we will see the indicator also following the price action and showing us the directional change. So in this case, when the Euro USD stayed in this lower side negative territory for quite long, we saw these output dipping from above zero to below zero. And if we go back in time, when the momentum was bearish, we had these output of this indicator PPO continuously in the negative territory. So it would have kept you with the trend and you would have gone on for many short selling opportunities, keeping up with this price action and the indicators output. And as the price action went sideways, we saw the PPO starting to rise and eventually it crossed above zero. And we saw some sharp move on the upside also, but that momentum wasn't really sustained. So eventually, in coming hours, again, this output of the PPO stalled, it started to decline gradually and inched back on the lower side. So this is a major benefit of using the the higher time frame for the calculation of the indicator. But of course, as I said earlier, also it is going to show some lag, and the response time is going to be much higher. So you have to go for two different types of combination. I would suggest that you also use the lower time frame and the higher time frame indicator versions, and you can customize these indicator in two different ways, and then try to look for finding the optimum entry. Now let us try out other options which are available to us. Now I will restore the calculation period to default 12 and 26. Let us try out these SMA types, the MA type, moving average types, depending on which kind of moving average you use for the calculation of the indicator. Again, you will see large variance in its output value because each type of moving average is going to be differently responsive to the recent price fluctuations, and as a result of that we are going to observe these changes in the output of the indicator. So here we get this output which is looking a lot more different when we are using EMA as our applied moving average for the calculation of this indicator. When we use WMA, again we will see very different output for the indicator. So depending on which kind of moving average you use, you will see large variance in the output and thereof the signals generated. Trima, it is looking a lot more smoother. KMA, let's see what happens when we use KMA as our defined moving average. Stability is a lot more in KMA. All right. MAMA. Then we have T3, HMA, LWMA, SMMA. So all these different types of moving averages will give you different types of signals depending on how these moving averages are calculated. I had done the sessions on various moving averages during the introductory time, and if you have seen those sessions and if you have not, I would suggest that you refer to those sessions to learn about various types of moving average and then why we see significant variance when we use different types of moving averages. That will become much more clearer. Coming to the output value, the output of the indicator can be color coded in various different ways, various possible ways. So if you want the trend up and trend down to be defined differently, you can go for that. So you get these options to go for different types of colors. Style can also be varied. Width, you can increase or decrease the width. Transparency factor can also be varied. So all these options are there. Advanced levels, we don't really have any. Coming to the advanced editing option, if you want the calculation for the indicator to show the same output for the current candle period, then you have to opt in for this option. Then this output will remain constant throughout the current candle period. Else, otherwise, it will keep varying depending on current applied price. If you want the calculation period to be highlighted so that it becomes easier for you to remember what is the current calculation period, you can go for this option. Calculate from custom data. The calculation can be customized further. If you want the instrument to be same as the chart, to have this indicator plotted on all the instrument, you can use the instrument from the chart. But if you don't really want this indicator on other instruments, then you can simply specify the euro usd to be the only instrument on the instrument for the indicator, and only for euro usd you will have this plotting. The candle period can be same as per the chart, or you can even vary it. You can go for different candle period for the purpose of calculation of the indicator, even when we have our as the defined time for the each candle for euro usd on the chart. We can go for 15 minutes as the defined period for the candle when we are using this indicator PPO. So here this PPO calculation is dependent on 15-minute candles, not on the hourly. So you can go for different combination. Advanced. Now I will restore it back to use from the chart. The side can be ask or bid. There is going to be slight variance, not much. It is going to be only slightly different. The output is going to be slightly different when we use different types of price for the purpose of calculation. You can simply use it from the chart as well. If you want the indicator to be available on all the candle periods, you have to opt in for this. Else, you have to specify on which candle period these indicators should appear, and only on those candle period these indicators will appear. So you have to be clear in this. Now here for 15 minutes, we don't really have the indicator plotted, but if we change it to 5 minutes, we again have the indicator plotted. Same for the hourly, but it won't appear on the 4 hourly time horizon, as we have defined the indicator to be shown only on hourly and 5-minute time horizon. Base spread can be any of these 5 options, but for this indicator we will see slight difference. So it depends on the indicator. Sometimes there is no difference in the output even when we vary the base spread, but for this indicator you will have slight difference in its output value when you vary this base spread. All right, so guys, that's it from my side for today's session of this JForex indicators explained. I would suggest that you try out various combinations provided to you on this platform, and you will see how you can take advantage of these various indicators given to you, and try to figure out any combination which you feel will have higher probability of making money than losing money. So in that way, you can go for various combinations. You can see what works best for you, and depending on that you can go for the trade entries can be defined. So that's all from my side for today's session. I will be back tomorrow with a new indicator, new explanation. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there too. For trying out the newly released platform, I have included the link in the bio. So give it a try and let me know how it works out for you. Thank you all for joining in. Goodbye.